You stick to the strategy that works for you. You know, one thing about trading is 90% psychology, 10% strategy. And you ask yourself why. You can have the whole strategy, you can know the whole strategy, you can know the whole support and resistance, you can know the whole zones, you can do everything. You can be very good. But if you're not disciplined, you will never make money in the Forex market. And the only people that can be called Forex traders are people that are actually trading and making withdrawals. Because tell me, I will fund my account to the $1,000, I will grow it to $3,000, I will blow it back to $500, and the next thing the account is gone. I'm not withdrawing, but I have good strategy. Am I a trader? No, I'm a gambler. So we've been going through so many strategies. At least when we started this movement, this Master Trader Institute, I started from basic and started teaching from basic for those who have no knowledge about Forex trading. And we got to the intermediate and we got to the what? Professional part, where you can now be using your strategies to determine trade yourself. You know, some people ask me, hey, Queen of Pips, do you have a signal group so you can be calling signals for me? I don't like such things. Why? Because I want you to learn this thing yourself. If you know you're not going to be a Forex trader, be a Forex investor. Warren Buffett is not a trader, but he's a Forex investor. He has traders that are trading for him and they're making money for him. It's not necessarily that you must be a trader, a Forex trader. But for you to just want to be part of it and sit down and be collecting signals, you'll be collecting signals from east, west, north, south, and eventually you're not going to be profitable. You'll be losing money. So it's either two things. You're either a Forex trader or you're an investor. Myself, I trade and I'm also an investor, but my large funds is actually in the investment part, because sometimes I'm too busy, I forget that I'm trading. Sometimes I don't trade. Yeah, there's a time in my life that trading was all I do. But I needed to diversify. I made some money in the trading, I invested in other things, and I got busy. So if you want to be a successful trader, like I always say, you need to learn to be what? Discipline. Pick a strategy. The strategy that I'm actually been using since I told you was derived from one of my mentors. His name is Papa Smurf. He brought a strategy called rectangle strategy. That strategy, you do it on what? A 4 hours time frame. But I noticed that it's not everybody. My chat is not moving. If you can hear me loud and clear, can you type 555 on the chat box so I can know that everyone we're on the same page? Thank you. Thank you, Babatunde. Thank you, Basi. Thank you, Tom. So we're going to start. Like I said, this strategy was derived from, the inspiration came from my mentor's lecture, Papa Smurf. You know, Forex trading, nobody actually came up with any strategy. The people that actually had the main strategy were those in the past that had those harmonic scanners called Gatley, Bats. These are people that took their time, sacrificed very well to spot this technical analysis and brought it to the world. Every other person now in the 20th century, in the 19th century, actually took something from other godfathers that actually been in the Forex market. So this rectangle strategy is actually beautiful. You can do it on H4. But I've seen that not everybody is patient enough to wait for the analysis before they take their trade. So I was doing my own research, I was doing my own studying, and I was like, can I do the same thing and even add some other things to make it easy for both scalpers, retail traders, intraday traders, and position traders to actually benefit from it? And that was what gave birth to the Queen of Pips strategy, the QOPFX strategy. That strategy has actually changed my life and so many people's life that I stick to it with their trading journal, and they've been making success using this strategy. Now, the first thing is that this strategy is done on what? 15 minutes. It's done on what? 15 minutes. All you need to do is follow the rules and regulation. And if you do that, you're good to go. And what is the rule number one? Identify a trend. Identify an impulse move. And that impulse move you are identifying should be an impulse move from the past, because this analysis helps you determine what's going to happen, as it helps you predict what's going to happen in the future. And the beauty of this thing, that I've tested it on currency, is working. I've tested it on indices, is working. I've tested it on cryptocurrency. I use it on BTC. There was a time I predicted, I wrote it on my Twitter page, that BTC was going to get to a particular price. When it dropped, I said this price is going to drop to XYZ amount before it goes up. And exactly the way I predicted it, that was the way it happened. Did I just wake up one morning with a magic wand and I said, okay, this was going to happen? No. This was the strategy I used to determine that. And that is what I'm going to teach you. And that is what I'm going to use to analyze the 5 trades that we're looking at for this week. Now, the first thing, like I said, identify an impulse move. And what is an impulse move? I'm going to draw it with a pencil first. An impulse move is something like this you're seeing. This down here is an impulse move. It could be either a bearish move, it could either be a bullish move. But what's going to happen is it must surely be an impulse move that has happened in the past. Now we've identified an impulse move. This is a bearish impulse move. On 15 minutes, we can now determine how to draw our analysis using the QOPFX analysis. Now, what is to pick your trend line and draw from here up to the end. You have to pick from the beginning of the impulse move here to the what? To the end of the impulse move. And when I mean that, it needs to be the recent high and the recent low. Now, this is the highest we've seen on this impulse move, and this is the lowest we've seen here. So you use your trend line to drag it from the beginning of the impulse move to the end of the impulse move. That is the number one step you're going to take. And the number two step you're going to take is pick your rectangular box, which is this place, and draw it from here up to this place. Please, can you give me just 1 second? Let me pause this. Just give me a second. Okay, sorry about that. I needed to fix some technical glitch. All right, so you pick your rectangle and you draw from the beginning of the impulse move to the end of the impulse move. Now we've identified it using the rectangular box. Now you pick your horizontal line, identify the floor, which is your what? Your supports. And you pick another horizontal line, identify the top, which is your what? Your resistance. Now with this, I've identified what? A movement. Now in between this floor and the ceiling, that is where price is going to be going either upwards or downwards using what? Our pivot levels. Now this line I drew here is a pivot level. This line I drew here is a pivot level. Now in between the space between here and here, there's so many other pivot levels inside. But how can we identify that level? You pick your horizontal, your trend line again, and draw from the tip of this rectangle down to this place. This is for benefit of those that don't know the strategy, or maybe this is your first time for joining this class. You must go back to the beginning. If this is the first time of hearing about Forex, this will be a little bit like French language to you. But if you know about Forex, you just need to learn about the strategy. Good, I think you can catch up. Now, the intersection between these two trend lines, that is where I'm going to put my first pivot level, and I've identified it. If you look at it with your eagle's eye, you can see that price is actually respecting those levels. Respecting those levels. You can see that up here and up that. Now I'm going to pick this and draw from here. Now the box has been divided into two equal parts. The same thing I did for the bigger box, I'm going to do it for the larger box. You know, look at this box, this one here and this one here, because I want to identify other pivot levels that are in this place. Now I'm going to draw from here to here. It may not be accurate, but those levels, price will respect it. And I'll pick this and I also draw from here. Sorry, my laptop is just moving its hands everywhere. Now the intersection between the two horizontal lines, this place, and this place, I'm going to put a what? Sorry, between the two trend line, the intersection, I'm going to put what? A horizontal line there. And I'm going to put another horizontal line here. You can see how price is actually respecting those levels. Now, after drawing this, the main important thing is to know your exit and your entry point. But before we do that, let's do the same thing for the upper box here. I'll pick my trend line here from here, and I'll draw it up to this place. The work is drawing this, but by the time you draw it, you don't need to be drawing it anytime except when price breaks above what or below the last low and the last high. That is when you can decide to withdraw it or you clone it and you paste it. But because price is still within that range, you can use this and predict what's going to happen in the future. That's the beauty of this. Now the same thing I did down here, I'm going to do it here. Draw it here. And the same thing I did here, I'm going to put it here as well. Now, beautiful. For the fact that price is still within these levels, there's no point me drawing more what? I can use these pivot lines to identify and determine what's going to happen in the future. Now, what I added to this is actually using the 200 EMA, exponential EMA, and the 50 exponential moving average. Now, I already have it here. So all I need to do is I hit it, I need to unhide it. This is the 200 EMA, and this is what? The 50 EMA. Now, why am I using this? Now, let me expand this. I just zoomed out so I can draw my box. Now, let me do this. Beautiful. Now, before I tell you the use of this part of it, how you can go in and out of this strategy, the number one thing is this. Let me hide this EMAs first, then I'll explain how the EMAs can help you. The number one thing first is for you to do what? Know how to go in and know how to do what? Go out. Remember, this is a 15 minutes time frame. The beauty of this strategy is If price, let me look for a point where I can, let me look for the recent, what happened in the market recently. Now you can see this, what happened here. If price breaks below your pivot level, just like what you're seeing here, this is a bearish candle that broke this pivot level and closed below the pivot level. All you need to do is wait. Before you can enter a buy or a sell using this strategy, two candles have to confirm that, yes, I'm either buying or I'm either selling. The first candle is a candle that will break the pivot level. The second candle is a candle that will break and be above that pivot level. Now, let me give you an example. This green bearish candle here. Okay, let me say that this bearish move came from here up to this place as your TP. And you're thinking that, okay, price is going to continue selling. But this bearish candle closed below the pivot level. All you need to do is wait for the next candle to close. If the next candle closed below your pivot level of 1722, what you're going to do is take your sell. But because the next candle did not close below 1722.210, rather it closed above it, what you need to do is wait for the next candle. If the next candle closes above this, just like what you're seeing here, this one now, this next 15 minutes candle closes above your pivot level, this is now an indication for you to do what? Buy this pair. Now you ask yourself, where will my stop loss be? The risk reward ratio of this analysis, or sorry, of this strategy is actually what got me attracted to it. Because your stop loss will be below the candle that broke the pivot level. Now imagine I waited, I saw this candle, this bearish candle here, and this bearish candle actually closed, and I had in mind that, okay, I'm waiting for another candle to close below it so I can take my sell. But another candle closed and it didn't close below, rather it closed above it, which is this bearish one you're seeing, the bullish candle you're seeing here. Remember, this is a 15 minutes, so you have to wait for 15 minutes. So instead of me to just take the buy, I need another confirmation to tell me that, yes, this candle is going to continue buying. And that is this confirmation here that this 15 minutes candle closed above. So as soon as it closed above, I'm taking an instant execution buy. And where is my TP? My TP is on the next pivot level, which is 1745. Where is my stop loss? My stop loss is below the candle that broke the pivot level. Now the question is, using this strategy is not compulsory that you must wait for it to get to this pivot level. Everybody have the number of pips that they are looking for in a day. Now, why I love this thing is that the risk to reward ratio is very good, is very, very good. So imagine I took this pair. Let me draw it. Let me use the long position. I took this pair here and look at it. This will be my TP here, and this will be my stop loss. Remember, I told you your stop loss is going to be below the candle that broke it, and your TP will be what? The next pivot level. Now you can see the risk to reward ratio here. How many people can see the risk to reward ratio? So I'm losing just how many pips? You can see how many pips I'm losing to gain what? 3 to 19. You can see the risk to reward ratio. 3 to what? 19. That's why this is very beautiful. So if you choose to use 0.01, fine. If you choose to use 0.02, you are still making money from this market. For those who took a buy on this pair, if you're using this strategy, for those who already started using it, they're already on a buy on this pair, waiting for it to get to the top. Now, this pair actually stopped in the middle, at the middle of this what, in between here and here. What will give me more confirmation that this thing is going to buy? That is where the EMA comes in. If you're actually doubting, am I sure that this thing is going to buy or what? The EMA comes in. Let me bring in the 200 EMA. Now the 200 EMA tells me if price is above the 200 EMA, is an indication that it's going to go what? Bullish. It's going to buy. But if price is below the 200 EMA, it indicates that it's going to go what? Bearish. So now if the market opens today, tomorrow, or rather maybe by 11 o'clock today, because it's Sunday. I don't like taking trades on Sundays because it's actually, the spread are wide and sometimes the markets actually move anyhow. But some people do take it. So if you want to still take the market, this still shows that price is going to come up to this level of 1745. Now the 50 EMA tells us the direction as well. But what I use the 50 EMA is just to indicate the crossing. If 50 crosses 200 above, it's telling me that yes, there's a strong movement on the bullish part of this market. But if 50 crosses below, just like what you're seeing here, it's telling me that what is happening, the price is going to go bearish. Now, for those who want to enter this trade like a re-entry, after entering this trade here, like I entered, for those who entered it maybe on Friday or when this market actually gave this opportunity, and you're expecting price to get to this level, and you see something like this retest on your 200 EMA, this is another opportunity for you to buy this pair if you want to take more positions. So remember now, your first position is here, your second position is here. Now, if you are putting your second position here, your stop loss should be the candle that broke the 200 EMA, which is this one. So your stop loss should just be below this candle here. That's for you to do what? Manage your risk. Remember this one, you must have secured your profits because you entered somewhere around here and price has gotten to this place. So you must have secured even if it's 10 pips. And this one is an re-entry that you entered because price did what? Broke your 200 EMA, came back to retest it. It did not break below. So it's telling me that there's a tendency that this market is still going to go up. And you took another position. Your stop loss would be the green candle that broke the 200 EMA, and you're expecting price to get to the top. So for me, looking at this price, let me write it down. Gold is bullish for me. Buy opportunity on XAU USD. So if you're entering this trade, as the market open, you can enter this trade for buy. CP 1745, stop loss. Because you missed the first entry, so your stop loss should be, like I said, the candle that broke this, which is 1729. So it's actually much. So you have to wait for when the market open. You wait and see how it works. But this is what I see for gold. Buy opportunity for gold. So I'm expecting gold to do what? Go up to this place. So we have an analysis for gold. If there's any question on that, you can type on the chat box. For sure, it's not, sometimes you might not have it at the middle immediately. Do you understand? You might not have it, but it's still, okay, this one. All right, okay. Thank you. I've seen it. I think it moved. All right. But we're not even working on that because price has actually moved away from there. Thank you very much. Thank you very much for the observation. So for this, I'm expecting a bullish market on gold. So if you want to take this market as it opens, maybe after 1 hour, when the spread has actually reduced, you can do what? Take a buy. I'm expecting gold to go back up to that place that it came back from. So this is what I see for gold. And let me do USD, GBP, USD. So it's the same thing. The only problem here is drawing that That's what? Drawing the what? Those rectangular box and all that. Now, this is another one that we're seeing here. Why is this not going back? Beautiful. Now, this is another impulse move. You can see from here up to this place. You can even see what? A double bottom indicating M. But that can determine what is going to happen. Is either this M, this price is coming to test here. Look at what happened here. Let me show you. So I'm going to check if a pivot level will determine, oh, is this a retest for the continuation of what? A sell? Or is it going to break it for us to buy? So let's draw our rectangular box, and it's going to determine and tell us what's going to happen. But you can see what's happening here. Price just came here to do what? Retest this M here. So we're expecting it to either drop or either go up. So we're going to see what's going to show us is what? The QOPFX strategy will tell us what's going to happen, and also our 200 EMA will tell us what's going to happen here. So I will do that now. Pick your trend line and do this. From here to here. Pick the rectangular box. This is just where the whole problem is. But if you can draw this, every other pivot level is easy. Well, I don't know what's wrong with my system. I'm waiting for my Apple system to come. When it comes, I'll fling this one. This one is giving me a headache. The shakara is too much. Okay. This is just. All right, so my chat is blinking. 1 minute. It's like my dash me. Since the screen of this laptop cracked, it has just been giving me a headache. Because I use it for so many things. I don't even know. Imagine myself giving it out to these people to fix it. Because they might waste so much time fixing it. Okay. So all right, so I've identified the two. I'm sure if you understand, if you know how I'm drawing this, how to draw this on your own, please can you type on the chat box? If you know how to draw this on your own, please can you type on the chat box? Say yes. Type on the chat box if you can do this on your own. If you can do this and just follow it the way it is, trust me, your trading life will be easy and better. You won't have to stress when it comes to trading because it tells you what's going to happen in the future. All you need to do is just to apply the principles. All right, I'm trying to identify all the pivot levels here. Okay. Now you can see what's happening there. This has told us that, okay, there's something happening here. You know, even without us drawing our rectangle, we saw that price came here and did what? Respected it. So now you can see that this place is a zone. It's actually a zone for now it's a resistance zone. It used to be a support level, but this impulse move broke it, and it's coming back to test the zone. So either come back or do what, or keep going up. So it's going to tell us what's going to happen. This is telling us, okay, this is actually what's going to happen. Just sorry. Drawing this can be very tedious, but Forex is taking money from the impatient and giving it to the patient. That's just Forex. If you can't wait for your analysis to set up very well, you end up giving money to those who actually waited. Now, I'm getting all the pivot levels. 1, and this is another level. 2, this is another level. 3, oh, stop it. Remember, it's an intersection. And another level here. Okay, so now we can see why price actually, you see why price closed here. There's a pivot level there that made price to do what? React. If you come here, you can see it here. Look left. Can everyone see it here? You can see this weak rejection. Let me change it to arrow. You can see the weak rejection here. You can see it here. So why did price close here? Because something is happening here. So if you don't draw this rectangle, you might not know why price reacted like that. Let me refresh this and see. Let me restart it. So you see why price did this thing, because there's actually a support zone in that area. No, now for this strategy, using this strategy, it tells me that, okay, price actually closed on a pivot level. So what I'm going to do as soon as market open is do what? Wait for the next candle to close. If the next candle close, just like what you are seeing here, you see this one close above the pivot level, this one close above it. You take your buy to the next one if you want to. Now, this one has done what? Closed there. This is where the market closed. So tomorrow, if the next candle, as soon as market open and the next candle closes above the pivot level, take an instant execution buy. So for me to have a double confirmation that this thing is going the way I'm going to, my 200 EMA will tell me, am I buying or am I going to sell? Beautiful. What did I say when price is above the 200 EMA? Is it bullish or is it bearish? Can you type on the chat box? If price is above the 200 EMA, what is the indication that price is going to go up or down? Please type on the chat box. Bullish, good. Thank you, Chidera. Thank you, Babatunde. Beautiful. Ibrahim, good. That means you guys are paying attention. So I need no other further confirmation to tell me that this market is still going to go up to the next pivot level. All right. So now let me see more confirmation with the 50 EMA. What is going to happen? Beautiful. Price close exactly at the tip of the 50 EMA. Price close at what? The tip of the 50 EMA also close above my pivot level. So if the next candle that opened close above this, I'll take a buy. So we already have a buy analysis on this for GBP USD. Buy analysis on GBP USD. Now, like what I showed you for the gold analysis, if you miss the buy somewhere around here, For you to have more confidence to take the buy again, or let's say you enter the buy here, for you to have more confidence to have a re-entry, this crossing here, 50 cross 200 EMA, it tells you, okay, I'm going up. You take another what? Entry. Because it closed above your 200 EMA, you take another entry to your TP here, or you can still be moving it. That's, you know, I told you this strategy is for scalpers, intraday trader, position traders, and whatever you want to call yourself. You can scalp it, you can just go take your number of pips you want to take, and you leave the market. Now, like I said earlier, as soon as the market opens today, wait for the next candle to close. If it closes above the 50 the pivot level of 37814, take a buy. So let me write the text for this. Buy opportunity on GBP USD. Price closes above 1.37814. Stop loss would be 37, 1.37750. 1.37750. And your take profits, your TP will be 1.38 plus 340. That is, you know, there's a condition for this particular trade. There's a condition on this particular trade. You have to wait for price to do what? Close above this, the next 15 minutes candle. The next 15 minutes candle. So let me pick a position calculator. Assuming price closed above it, so this is where your TP will be. This is where your stop loss will be, somewhere around here. So you can see the risk to reward ratio is actually good. That is why I like this. The risk to reward ratio, everything about trading is risk to reward. If you are losing so much to gain little, you're not trading, you're gambling. So please always know how much I'm willing to what? Lose before I can do what? Gain. Always take that into consideration. Don't just trade like you're gambling. No. The stop loss is below this wick here, this particular trade here. So it can go further below than that. I think so. Let me change this to cross. So you can tell me exact place. Okay, beautiful. Somewhere around there. So that's why you're risking to do what? To get that. So, but this is under a condition that if price closes above where the present pivot level is now, we buy it. If price doesn't close, do not buy. So wait for price to close above it before you take your buy to the top. If not, let this span go and wait for the opportunity to see what's going to happen. Now the next one is USD card. I love this pair so much because it respects what? Structure very well. What does it do? It respects structure very well. This one is just looking like the GBP USD that we just analyzed. Now we found our what? Impulse move, which is from here, this place down to this place. Beautiful. So you just pick your what? Your trend line and identify your two impulse move. That's just it. Identify your impulse move. You can see it here. Pick your rectangular box and do what? Pick it from here down to this place. And pick your horizontal line. You know why you have to use this horizontal line? To identify your ceiling, which is your resistance, identify your floor, which is your support. It's always very, very critical, very important. Trading is just support and resistance. You buy at the support, you sell at the resistance. Buy low, sell high. If price breaks a support, retest the support, what will you do? That support turns to be the new resistance and you start thinking of sell. If price break a resistance level and retest the resistance level without breaking it below, that is no longer a resistance level, is now a new support. You look for what to buy. That is how simple trading is. There's no complication. That's why if it becomes complicated, you see me, I wash my hands of it. Now I've identified it, the pivot level, using these two trend line. So I'll pick my horizontal line and do what? The intersection, I put it there. Looking at it, you can see how price is respecting it. All the zones there, you see here, boom, broke it, came back, testing it. That means there's something special about this area. When price gets to this place, it reacts. So we're going to do the same thing for this guy down here. And we're going to do the same thing for this guy here. Okay, and the same thing here. Have you seen that even without drawing this thing, you saw why will price come here and turn back? You know, this help you to know when a pullback has actually finished. This strategy can help you to know when the pullback is finished and for you to go back. When the retracement is finished and for you to go back. That's how simple and very important this strategy is. If you know how to use it, you can use it on any time frame. You can use it on any time frame. But why I like 15 minutes is easier to wait for 15 minutes than waiting for 4 hours. 4 hours candle, that's 8 hours. You're going to wait. An average Nigerian don't have that patience at all. They say, why are waiting for 8 hours? People are making money. So that's why I had to take it to myself to see how to get it out there easy for everyone to participate. And that was gave birth to QOPFX strategy. And that's what we'll be using. Since I already know it, that's what I'm going to be using for analyzing any trade I want to take. I don't need to do more things to give myself headache. Now we can see here that price got to a resistance level, which is a pivot level, and it fell. Let me reset this so you can see a better picture. You can see what happened here. This candle broke it. This one closed below it. Selling, it did not get to our TP, which if you are actually using the strategy, your TP should be out of here. But price did what, came back here, did not break it, and it's still coming down. So looking at it, it's telling me that this pair is actually coming down. But because you don't chase trade, it has actually gone so far. If you want to take this pair now to come down here, how many pips are you going to look at? So what we're going to do to confirm, is this a continuous downward trend? Type on the chat box and tell me what else am I going to use to confirm if this is going to continue going down. What am I going to show to know that yes, this guy is actually going down? Type on the chat box. Let me know that you're following. What other thing am I going to do to have my confirmation very strong to tell me that this guy, this trend coming down is actually going to come down? Beautiful. 200 Whoa, I'm so sorry. I'm sure it's recording now. Okay. The 200 EMA. So let me open it and see what's going to tell me. Beautiful. So you can see now that the 200 EMA indicated that this guy is going to keep going down. How many people can see it clearly? You can see for why this you actually need this 200 EMA. So you can see it here that the 200 EMA has told us that, all right, this USD card looks like something that's actually going to get to its TP, which is 125493. But if you want to take this trade, I'll tell you to be patient, because from where the trade is to where it's going to get is about 30 something or less than 30 something pips. So it's just like, because you've missed all the movements all the way from here, missing it here, you've missed all this movement. If you want to take this trade, you're going to chase it. For you to know that this trade is actually going to sell very well, for you to have more confidence and confirmation that I'm going to take it, you wait for it to break this new pivot level, close below it, then you sell it to the next one. But if you choose, because this has shown me that yes, the market is going to do what, sell. Now let me click on 50 and see. Oh, you can see that 50 is actually making wave to do what? Cross what? The 200 EMA. Now let me reset it so we can have a clearer picture. Beautiful. You can see what's happening here. So now, what I see here is what? A sell opportunity for USD card. Thank you, Babatunde. Thank you, Basi. You're paying really attention. So I see a sell opportunity for what? USD card. So USD card is going to do what? For me, I'm taking a sell to this place. It's a short sell, but when it breaks this, I'll take it to the next place. So what I'm going to do is to write TP1 and TP2. But our stop loss now will not be above the one that broke the pivot level, because you missed it here. You missed this trading. You can see how beautiful this is. Look at the consolidation happening here. I know for anyone that entered this trade, you must have hitting you out because of what? It's consolidating. It's not going to buy. Maybe you entered it, oh, this thing has broke here, this one broke here, and I took a buy. It came back and hit me. It did the same thing. I took a buy, it came back and hit me. And if I already did this and I decided to sell it to the next pair. So for here, I'm going to do what? Take a sell on this pair, because it's giving me more indication of selling than what. If you can see, this is a consolidation here and a breakout. This is a breakout. It broke out, it came here and it retested it. So it's going to do what? Continue going down. So for USD card, for me, I see a sell opportunity. Sell opportunity on USD card. SL will be somewhere around there because you missed it. So this candle that broke the pivot level, 1.25870. 1.25870. And the TP will, this is TP1. TP1 will be 1.25493. 1.25493. And TP2 will be the next pivot level, 1.24874. I'm just doing that because I've seen more indication. You know, before you can enter that one, you have to wait. If you do two positions, by the time this has gotten to your TP, you move your entry, your stop loss to entry price for the second entry, right? So I'm sure everyone understands that you need to secure your profits. So I'm just doing this TP2 because I've seen that there are other opportunities for a continuous sell on this. So 1.24874. So that's TP2. This is for USD card. So I'll pick our short position calculator. Let's say you enter from somewhere here. So your stop loss will be here. Candle that broke the 200. This is your first TP. That's your first TP, and the second TP will be here. Okay, you can see the risk to reward ratio is actually beautiful. Any question on this before I move to indices? If you have any question for the Forex part, please, let's see it. So gold, we have a buy opportunity on gold. It has already started. GBP USD, we also have a buy opportunity on GBP USD. And USD card, we have a sell opportunity on USD card. So if you have any question, please type it before I move on to indices, where I show you step. And I'm actually buying step already. So I'm actually buying step. Oh my God, I was teaching and it broke this. You can see it has broken it. I was supposed to buy this again. Oh my God. I'm entering it already. Oh, I'm supposed to buy it because I was teaching you guys. You can see it has taken me out of my stop profits. Oh. My other entry took me out of stop profit. One minute. So you can see the same thing here. This is a candle that actually broke the pivot level. So my stop loss will be there, and my take profit will be on the next. Do I need to analyze this one? This is just the same thing here. It's a buy opportunity on step. I'm expecting step to get to at least this level of my pivot level. So when step gets there, what happens? I will watch it to see if it's going to continue selling or is it going to continue buying. But this is the bus stop where I'm looking for sell to do what? Turn around, because you can see my 200 EMA indicates what? A buy. 50 EMA crossed here, indicate a buy. It was this during this place that I entered my own first position. I had so many other positions, but it keeps, one has hit the take profit and the other one hits take and stop profit, and it's still going up. So if you're on this call, you can take a buy. You can see I took a buy on this on step. It has given me more position to take a buy. How should I trade when price keeps going up and vice versa without respecting the pivot level like good did on last Friday? That's why your risk to reward ratio is actually there. Sorry, give me 1 minute. Excuse me. Because in trading, you need to understand, like I said, trading is 90% psychology. When price is consolidating, you need to know that you don't even have to take that trade. Just give me 1 minute. Let me get water to drink. I'm going to go back to USD card so I can show. Okay, now. Someone asked a question about, the market has opened already. You can see it started timing here. Now, look at this place. As a Forex trader, you know how the markets move. Let me draw it. Bullish, sideways, which you're not supposed to trade, or what? Bearish. You need to take a trade when market is moving like this. You need to take a trade when market is moving like this. But if market is moving this way, you're not supposed to take a trade. So if you want to take like this, what happened here now, you can see that price is consolidating in this area after this bullish move. You've entered the first one, it hits you up. You enter the second one, it hits you up. You allow it to wait. You wait and you allow the consolidation to do what? To break out, just like what you see here, before you can take your trade. That's why it's not about you going in and out, coming in and out of the trade. Now, listen to this. You know, this is your 200 EMA, which has been indicating that this has been going up on an uptrend. And there's no way that price will go up without breathing. You know, this is just like when you have a life support on. And you can see when the person is taking a deep breath, it either goes up. By the time it goes on the straight line, you know that person is no more. But when the person is breathing, you can see how the thing is going up and down and all that. So this is what's going to happen here. You've seen that there has been all this while market has been going up. Let me take this off. Market has been going on an upward direction. And maybe you saw this thing late. Why is it? This not delete. Move here. Let me change it. So you can see that market has actually been going on an upward direction, and you took this trade. Let's say you saw it late. You as a trader, you should know that, oh, this movement has been going up. There's a tendency that it's time for it to actually breathe in a bit. So if you made something of this nature, because I'm sure this is what he's talking about, that he mentioned gold, but I'm just saying this on USD card. That's why I'm using this on USD card. This you're seeing here. Like I've always told people that when you are using this strategy, even if you use this strategy and you see something of this nature happening, you know that, okay, yes, price is consolidating. I need to wait for it to do what? Either break to the upside or break to the downside. Now, what happened here after this consolidation? Price broke down. So price breaking down from here is indicating that, okay, yes, the trend wants to change, going downwards using this. Market has opened. We can see that price is actually going up. But let's see if it's going to get to our stop loss. Let me see this. Oh, see what happened. Market is buying. Let's see what happened. This is gold. Let's see what, okay, gold will open by 11 o'clock. Gold always open 1 hour before it. So now for the person who asked the question of what happened, here what happened with gold. You know, you can't even compare the pip count of gold or any other trade. So if you take your trades on gold and you've done 20 pips, 30 pips, you need to at least secure your profit before it hits you off from it. But all the thing I'm saying here, if you actually enter this trade, I don't know where you entered the trade, but it's looking more that it's actually going on the right direction. Look at this one that did here. It went back. This one that happened here, it came down, went back here, came down very well before it even went up. So if you enter the trade here and it did all this and you did not secure your profit, it shouldn't be anybody's fault. It should be your fault. Or you entered from here, you did not secure your profit, maybe you're expecting trade to come here, and this thing happened like this. Before it came down here, it went back up here. So you must have secured something. But you need to understand, how does the market run first? You know, this is 15 minutes. 15 minutes don't tell you. If you want to know how the movement of the market is on a higher time frame. But this will just help you for your exit and entry. So you can you have risks. Your risk should be a little bit lower. It should not eat too much to your pair. So I don't know where your entry was on gold. That's where you saw that, like if you entered a buy, it has not even returned back to hit you on your stop loss or your stop profit. If you entered from here, okay, let's say you entered from here and price actually went up to this, or let's say, okay, this happened, this candle did here, close, you waited for this one to close and this one closed and something like this happened. From here to this place is how many pips? Let me count it. Let's say you entered from here and we're expecting it to hit here. From here to here, look at how many pips price has done. 42 pips. You might have secured something before it even came down to this place. So what you need to look out for first is what? No matter how, yes, there's no strategy that's 100% perfect, but you need to put your own trading psychology to it when you're trading. It's not when it presents this thing, it presents an opportunity, you just enter. You need to look, is this thing going to buy or is it going to sell? Just like as I told you here, now I've seen that, oh, this guy came down here too and started turning back here. What happened? That's when I added the 200 EMA and I noticed that, okay, it actually is a test, it's a retest, and it's going back up to where it's coming from. That's how trading works. So you need to add your own trading psychology before you can take any trade. So let's go back to the page. Okay. Market has opened. I'm sure the spread is so wide. So I won't advise you to take any trade now. You wait for maybe like after 30 minutes, by the time the spread has come back together, then you can think of taking a trade, or even after 1 hour, you can think of taking a trade, because the trade now is actually, the spread are very, very wild. Okay, thank you. So let's go back to this. All right, you can see the same thing I did for currency pairs, the same thing I did on my step. You can see this is my step chart, and it's a live trade. I already took a buy. So if you're on this step, you can also take a buy. You can see my stop loss is below the candle that broke the pivot level, and my take profit is on the next what? The next pivot level. So if I put it here, that's how much. Okay, $85 is actually my this previous one, the first one I entered. I'm sure this won't be up to $85. Let me move this. It will be up to $85. So your stop loss for this step is 95.57.4. That's for those who took it now. 95.57.4, and your take profit is 94.96.2. If you followed me to take it now, stop loss is 94.57.4, and take, let me write it on the chat box. Step index. Step index. Stop loss 94.57.2. Take profit 94.96.2 if you took it now. So that's it. Now for volatility, after that guide, I've not, okay, you know what, I won't use, okay, I promise volatility 5. I've not actually tried this on any other volatility, but let me do volatility 5 and volatility, which one should I use, 100 or 10 or 25? Somebody should write on the chat box, out of the ones that somebody, that guy selected, let me check. Which one should I pick and I select from? He gave 2 volatilities. Let me pick 2. 100. Okay, 25 and 75. All right, let's do 25 then. All right. Wow, what a gap. Are you seeing what I'm saying? So I go to 15 minutes. I've not tried it. Okay, I've tried it on volatility, but I've not tried it on volatility 25, but I've tried it on volatility. God, I missed this pair when it was coming down. I will just add Was it this? Okay, I thought I already drew it. No, I thought I drew it already. Sorry. Let me give it a fresh. Okay. Insert, sorry, indicator, trend, moving average, 50. Trend, moving average. So this is already showing you that, okay, this guy is buying. But now how can I know when to exit and when to enter? You know how this guy works. I'll pick my trend line and identify my impulse move from here up to this high impulse move here. So there's a tendency that this guy is still going to break this impulse move. Just give me a minute. All right, sorry. So this let's do this here too. No, this is not empty. This is not trading view. Come to shapes, you pick rectangle, go from here. That's the same thing. I no longer trade volatility 75. After I dealt with me, it just means silly. So I just left it and focused only on what's it called? Step index. Step index is going down. You can see some losses. So you can see how price actually came to this resistance level, this pivot level here, and is reacting to it to come down. So let me draw the first one first, since it's at the top. You can do the other ones yourself when you draw it on your phone or your laptop or your tab, whichever. Okay, so I've identified this. Now listen, when you're against the trend, when I mean against the trend, because you can see that the 200 EMA is facing up, it shows you that the indication for this is what? A buy instead of a sell. So when you're trading, you should trade with caution if you want to trade against the trend. Now you can see that, okay, this one, if you say, this guy actually closed below my pivot level, it's showing me a double double what? Double top, I can as well sell it. You have to be very careful when you're selling this. Okay, you have to be very careful. You know, this is volatility. Any little movement, it goes up. So if you want to take a sell on this pair, you take a sell. As soon as you have a profit on it, you secure your profits. Well, let me even try. Let me take a sell on it. One click, but I'm going to take the lowest one. Let me just try. So my stop loss, you will see that little stop loss I'm going to move on the pivot level. See, $5 already. I put it here. See if price is going to get there. Price gets there, $25. So I'm losing 5. This is one ratio what? 1:5. If I lose it, I'm losing $5. If I gain it, I'm getting $25. So let's see how the market goes. So I just took a sell based on this strategy. Why did I do that? Because price reversed at this what? Pivot level, showing me double like an M. I'm just doing this, but based on this, because of I'm against the trend, so I need to trade with caution. Because I'm against the trend. 200 is telling me it's going up. It's more of a buy. So I just did it. This is my own account. I'm doing what? Risking $5 to gain $25. So that's the sell I took for this. Our step is almost hitting a stop loss. Let me see. Oh, it's almost hitting the stop loss. I think it's going to hit it. Oh. So if we hit this, we're going to wait for the next candle to close to tell me if it's going to sell or it's not going to sell. So this guy is almost hitting. It may likely hit it. So, oh, it has hit it already. See, lost small money to gain big. So now, if you want to enter this trade on a sell, you will wait for this candle to close 10:30, because the next 15 minutes, this candle is going to close by 10:30. So you wait for this one to close, this indication that, okay, yes, it's going to sell. Then you wait for the other one to close. That means if you're entering this sell to confirm your sell, you're going to enter it at 10:45. If the next candle closes below the pivot level, then you enter a sell, then your stop loss will be what? Above this. You know you're against the trend, so you need to trade with caution because 200 is facing up. So, but if you're taking a sell, because on trading, you can actually do sell and buy depending on how long you're going to be on that trade. So this has told me that since it hit the stop loss, it's telling me, oh, okay, I want to go down a bit. You know, this is indices, this is not Forex. So if this come down and the next candle, which is the next 15 minutes candle, closes below this pivot level, that's at 10:45. If it closes below this, you enter your sell. This pivot level here, 9442 will be your TP. Then your stop loss will be this one that broke it, if this is one that breaks it. That's how simple this is. So we can see I'm already on this guy. So watch how this one goes. This is for volatility 25. That's for let me see volatility 25. Okay, this is an impulse move here to here. Have I ever traded this guy before? I don't think so. right? Let's draw from here. So just do the same thing. With your horizontal line. Let's see what's happening on volatility. You can see why I say when you're going against the trend, you have to trade with caution. But let's watch it happen. It's just small risk. Let me see, step index. Okay. I think this is the last trade for today. I will call it a night. But step is still bullish, very much bullish. It's just that I have my initial entry, which is still at a good position. It has already been secured. Okay, let me do the upper one since that's what we're doing. If you took volatility, you can see the price. You know, the figures is much. So you can look at the screen and you can take the sell along with me. The buy, sorry, the sell along with me. But the overall trend, you know, is a buy. We're just scalping the sell. The overall trend says buy. Okay, so this guy is telling me, well, from this indication, this should be selling to this place here. But let me add my 200 EMA to have more confirmation. Bingo. So 25 volatility, 25 is a sell market. So you draw your rectangle and you do what? You sell your trade. Let me put a 50 and see what 50 has to do. Okay, so this indicates that I'm selling. So if we draw our next pivot level on the smaller one, which is on this, let me just complete this one. It tells you that V25 is going down. The trend is a sell. But like I said, sell from pivot to pivot, buy from pivot to pivot. That's how I make it easy for you. You can enter, if you enter at the peak, that one can be the one that you'll be trailing up to the next level you want to go. But if you do not enter from the peak, just be entering and exit, sell from pivot to pivot level, buy from pivot to pivot level. It makes at least you grow your account like that. If you are not the intraday trader or the position trader that keeps entering more trades and on and on. So this is telling us if this price, like the way it is now, price is coming down to this place, 30, 75. If it breaks 30, 75, it's coming to 30, 10. If it breaks 30, 10, it's coming down to the next one, which is this I'm drawing here. 3,000. So for this market, is actually coming down, it's selling. So for V, overall trend for V75 is up. Overall trend for V25 is what? Down. So if you want to do this, look for more buy opportunities on V this. But before you buy this pair, wait for it to close above what? This are resistance level. When it closes above this, then you can now clone this your box and place it on top and look for other positions. So we've gotten everything for today. Let's check our currencies to see how it's going. This is a USD card. This has not opened. This guy. Okay. So that is all for today. We've done the 5, I think we did 6 pairs today. We did volatility 75. We did volatility 25. Volatility 25 is selling. So if you want to sell this pair, you look for selling opportunity. Let me actually sell it. I don't like taking this. I don't know if this is the lowest. Let me just sell it. Okay. Selling this. Stop loss. Some of my stop loss here. Go to my tip in the next. I'm entering once. If you actually 2 times, one should be here. So let me leave it this way. If price gets there, fine. So I've sold volatility 25. I've sold volatility 50, 75. Though I'm against the trade on volatility 75, but I'm scalping this sell. I'm in profit already, but let's see how it goes. I'm losing $5 to gain $25. So that is fair enough for me. That's a good risk. And the same thing with 25. I'm losing how much? $4.93 to gain $15.84. I've been on the buy on. Okay, now you can see what I'm talking about. Step index. As soon as this present candle closes and it closes below, you take your sell. You take your sell. Your TP should not pass here, 94.42.7, because you're against the trend. So it's a short sell. It should not pass here. Here should be your what? Your TP. And your stop loss will be this candle. So if this thing closes like this, you take your sell to the next what? To the next pivot level, which is this place. And that's how it goes. Thank you very much. If there's any question, you can type your question on the chat box and I'll answer the question for you. All right. Thank you for joining.